Top Trader is brought to you by Sanlam iTrade and powered by Pegasus, now with a new Iris trading platform.
Right guys, so you were each given an African stock exchange to sell to us today. So of course you're going to be selling this to our esteemed panel of judges. Gerard Leroux from Imara SB Reid. And then a familiar face on CNBC Africa, Mike Barnes from Securities Africa. The contestants had 5 minutes to persuade the judges why their country was the best country to invest in and which 3 stocks from that country would show the best return on investment. The 7 countries chosen were Kenya, Ghana, Mauritius, Botswana, Zambia, Zimbabwe and Nigeria. The contestants used their creativity to try win over the judges.
Slightly more interesting, 2 bottles of beer. I'll explain the significance of that.
Some played their country's national anthems.
Could you all please stand up as we honor the great Republic of Botswana?
Some dressed up, and others even tried to win over the judges with the use of props.
Cool, thanks for the bribery, guys. This presentation thing was intense. A lot of the guys pulled a few sneaky tricks. The work was good.
It was a keep it simple theme because it ties in with my personality. You know, I'm very relaxed and calm. Right, hi there guys. As you can see, my country and my exchange I've been given is from Zimbabwe. It's difficult getting up and speaking in front of judges, you know, when you're being assessed and everything. Some people handle that better than others.
Good afternoon, judges. I have the privilege of representing the beautiful country of Mauritius. Time is a premium. I did this presentation from between 12 at night and 3 in the morning.
Sometimes you just doubt, man. You doubt what you know.
It's an extremely difficult market and there aren't that many options, and I think what you went with were quite good. The one thought to leave you with is, you know, Zambia is listed in London, and there's quite an attractive arbitrage actually there.
I prefer to stick to Ghanaian origin companies. That was my approach.
I do like your picks. I think you did really well.
I didn't know anything about the Kenyan market before, so I learned quite a bit in the process of putting the presentation together.
I think I quite liked your picks. I think you got a good summary there. I mean, cement, I get your reasons for that, construction, breweries, and if you ever go to Nairobi, you'll see that they do like to drink their beer. So well done.
They nailed me on the fact that I didn't choose Mauritian banks.
One of the recurring themes that you'll see throughout the continent is unfortunately liquidity. Did you take it into account?
But you didn't quite answer my question. Why didn't you look at buying it in London as opposed to Zambia? It's 20% cheaper there.
I feel like I could have done a lot better.
Anything I can fault you on, mate, is it doesn't have to be a depressing thing, you know? Be a little more upbeat. I honestly think it's one of the most exciting countries to look at.
I do feel like I kind of undersold myself a little, so I'm a little disappointed in that.
I just think you could have given us a bit more colour. That's basically all. Thanks.
But at the end of the day, there can only be one winner. So there we go, a 2-night trip to Kenya. You're going to not only be going to visit the CNBC Africa team on that side, but you're also going to get the opportunity to go to the Nairobi Stock Exchange. You're going to see how they trade there. You're going to get a sense for, you know, what goes on in an African exchange. And then, of course, you're going to get an opportunity to see Kenya.
You know, it was very difficult to pick because I think everyone did very well. The person we went with, we thought spoke well, researched well, had good details, understood his strategy, but then more importantly, understood what the risks were on the downside, which is very important. Stephen just said it now. The downside across Africa is potentially big. So we think this person did well in terms of researching that.
I concur.
The person who's going to be going on a 2-night trip to Kenya is, drumroll please, Jared. And we have to say it is an utter coincidence that you chose Kenya and you did the Nairobi Stock Exchange, but I suppose a good one at that.
I've never traveled anywhere in Africa. I've stayed in South Africa in terms of the African continent. So I'm very excited to go see Kenya and what Africa is all about.
Congratulations to Jared. I really do think he deserves it. Hope he enjoys the trip.
and I'm proud of the way Cape Town is handling this competition.
Welcome back. It's now time for the real test of the day. This is the Discovery Challenge. And this one, gentlemen, comes with an elimination.
Where there's an actuary involved, believe me, there are problems and it's difficult to understand. So I think to put you through this test was genuinely a big challenge. I read through all the reports. I'm not going to pick on each person individually. There was one report that stood out. It's still got a long way to go before it reaches the kind of level that we could be satisfied with. But what I've got are a few pointers that I hope will help you in the way forward if you're ever going to go into this trade, or even if you're going to write a report. First of all, when you read a report, or write a report, come out with your conclusion right up front. Let the reader know what you're going to say. So come out with your conclusions. Make them short and punchy. For every company, there's a good side and a bad side. In other words, you need a bullish report and a bearish report. You must be able to find the negative in a company and the positive. Your conclusion is either one of those. Avoid lengthy paragraphs. If you want to put off a person, have just a whole string of sentences that just keep going on and on. If you're going to quote numbers, make them comparative. In other words, if you're going to choose revenue, have a table. These are the divisions. This is their revenue. This is the revenue. This was the increase in revenue. This is the operating profit. This is the increase in operating profit, and so on. Don't jump from one to another. If you are going to look at revenue, look at geographic areas as well. This is what they earned in South Africa. This is what they earned outside of South Africa. What no one showed was historic earnings. Where's it come from? Where's it going? Where's it come from? You spoke about divisions, but no one plotted what the earnings in that division had been, for the last few years. Also, what never came across, comparison with its peers. How's it doing? How's a peer group doing? What are the peers? There's Liberty Holdings, there's Old Mutual, MMI, Santam, etc. You might not find a direct comparison, but what you do have to do is also give us some idea how they're operating. For example, their operating profits were up about 14%. A day or two later, Sanlam came out with much better results. When you discuss their earnings, look at consensus. What was the market expecting? Because that will give you an idea of how the share prices perform. The other thing is, that, I'm going to conclude on this. If you're going to put pictures in, make sure they're relevant. Don't put charts in simply because you think this is a great idea, that people put a chart in that's going to have some kind of relevance that we can draw conclusions. I think on that, there is one report. I think there's somebody who did try hard and did reach some kind of conclusion, a little bit of outside influence, not merely analyzing the half-year results, but did add a little. And that goes to Gary. I think Gary really tried very hard there. There were long paragraphs, hard to get through, but even I learned something from reading it. Well done, Gary.
A bunch of books from CNBC Africa with lots of insight into business and markets, Gary, so congratulations.
Thank you. Thanks.
That's not the only prize. We're really upping the ante here when it comes to prizes. We're giving you a 12,000 Rand currency trading course from ACM Gold.
Awesome. Thanks so much. I'm actually quite relieved to finally won a challenge. It's taken a while. But yeah, just on what David said when you touched on the reports, I did put a lot of work into it, but there are things that I've taken out now that I know that I can improve on when I write reports. But yeah, it just feels great to win one.
Well, the fun's over. It's now time to get serious. It's time for the second leg of the competition. This was all about taking a position on Discovery's stock post the results being released. Narina, I'm going to call you up to just take us through what this challenge was all about.
Thanks, Samantha. Yes, the second half of this challenge, as Samantha says, was very much about identifying what the share price movement of Discovery would be. And we specifically picked this period over a period of heavy news releases. So not only for the company itself, stock-specific news releases, it was Discovery's results that came out, but it was also quite a heavy week in terms of global macroeconomic data. There were a lot of other companies that reported, and we wanted you to demonstrate your understanding of the influence of news flow on share price movements. So you were asked to select both or to predict the closing price of Discovery on the Friday afternoon, and to be fair also, and to give a relative view, to say what you expect the all-share index to be over that same period in time. Now, if I look at my notes in terms of what you said, it's very interesting to sort of see how it compares to the fundamental reports that you did. Because 2 of you predicted that Discovery share price would fall over the week, whereas 5 of you decided that it would go up. Interestingly enough also, there was just 3 of you that thought that the all-share would go up during that week, so you can clearly hear the level of outperformance expectation that there was amongst the group. 3 of you did see the all-share falling, but not quite as much as Discovery would be falling. So in the process, we are once again confronted with a buy, a hold, and a sell group amongst the 7 of you. As we had it in reality, the Discovery share price fell 4% during the week, and the all-share index was actually up by 1% over that same period. So a relative movement of 5% between Discovery and the all-share index during this particular week. Gary and Saul, if I didn't know that you guys lived fairly far apart from one another, I would have thought that maybe you compared notes on this particular challenge, because interestingly enough, you both predicted exactly the same share price for Discovery on the Friday afternoon. So not only were you tied in that respect, but you were also the only 2 that expected the share price of Discovery to fall over this week. And although you were a bit bearish on the all-share as well, you both expected the all-share to fall during this time, because the overall direction was the best. There's currently, by analyst consensus, a buy on the 2 of you. In case you don't notice it, these 2 guys are actually big bulls. They were extremely bullish on the share price, not only of Discovery, but Jared didn't think that the all-share was going to do anything. He predicted that it would be flat over the week. And Zahir actually thought that the all-share would rise a little bit during the week. So you were very close to your prediction in terms of that. You actually predicted for the all-share to go up by 0.8%, and it went up by 1% over the period. I think you should sit down again, both of you. Thank you. The 3 of you were very good in your predictions of what the market would do, but you were probably a little bit too optimistic on Discovery's performance. We spoke quite a bit about how a good investment does not necessarily equate to a good company. I think you were all wowed by Discovery, and certainly from a fundamental basis, I think there's a lot of analysts that would agree with you that in the longer term, this represents a good investment as well. But as we saw over the week, unfortunately, Discovery did not represent a good investment in this particular week. Now, in analyst terms, that would be what we would call a hold. And you 3 this week are our hold recommendations. You're safe until next round. So, Zahir, you expected Discovery to actually rise by 4% over the week. You had that right, except the sign was just wrong. It didn't rise by 4%, but fall by 4%. Jared, you weren't too far behind. You expected a rise of 3% on the week. And as we've now heard already, none of these actually transpired. The question is, to what extent does the miscalculations or the misforecasting of these translate into a sell recommendation for either of you 2? Jared, you've done really, really well in this competition so far. You've been an excellent contestant. You've learnt a lot. You've traded very well so far. Zahir, I've seen you've grown over the weeks. I've seen you learn new techniques. I've seen you stick to your guns in many instances. It's been a good ride for you as well. But Jared, you're safe for the next round. Zahir, I'm sorry to tell you, but you have been trampled by the bulls and mauled by the bears. It is time for you to be red flagged in this competition.
Yeah, I'm fairly disappointed today, but it was a little bit of a hard way to go in terms of calling two shares, or the share and the all share index. Yeah, as I say, I'm a little bit disappointed. In fact, I'm greatly disappointed because I've enjoyed it up to now. But it's been a great ride and amazing learning. So the main thing is I'm taking a lot out of it, and I mean that's what I wanted to come out from the show. And so yeah, it's disappointing, but that's the way things go.